Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, S shares her story from India to the one-year Duke Masters of Management program. We learn how she landed a role as a buy-side analyst at a high-yield credit shop, how she made the transition from the office in the US to London, why she got promoted, and why she is now back in the US at Kellogg doing an accelerated MBA. Enjoy. All right, S, thanks so much for joining the Wall Street Oasis podcast.
Of course, thank you for having me.
It would be great if you could give the listeners a short summary of your bio.
Sure. So I'm currently an MBA student at Kellogg, and my previous experience includes having worked in asset management across the fixed income and leveraged loan universe, and I worked both in London and in the US. In terms of my education, I did my undergrad back in India, and then I pursued a master's at Duke to sort of like move over to the US, kind of start working in finance.
Awesome. Okay, so then right out of Duke, that's when you started your fixed income career.
Correct, yeah. So I started working in a kind of 2-year junior analyst position at a Buyside firm, and yeah.
Perfect. All right, let's go all the way back to undergrad in India. Tell me, was finance always kind of on the radar when you're in your first year? Did you know this is what I was meant to do?
So unfortunately, like a lot of kind of stereotypes, I think my parents did want me to try to pursue a science or engineering or medicine field, and then I just we moved at kind of a very non-opportune time during my high school, so the academic rigor was too intense for me. But I did find that I took a couple of accounting classes. I enjoyed learning about the story behind numbers, so that kind of pivoted me to sort of pursue a career in finance, and that's where I ended up pursuing my major in business and finance. Yeah.
Awesome. And that was what, like your second or third year, you had to kind of declare it when you're there?
No, so you end up having to actually do it before you like enroll.
Oh, okay.
So you kind of need to know, like by 12th grade, you need to know whether you're going to do like science, humanities, or like engineering or business.
Were your parents upset with that, or they kind of eventually came around to it?
No, my dad watches all the CNBC, so he's like, yeah, finance is a good career. So he supported that.
That's cool. That's cool. Okay, so you're coming up on around 2015, and when's the idea to come get a master's in the U.S. kind of going through your head?
Yeah, so I wanted to. So I'm originally from the Bay Area, and I wanted to kind of move back to the U.S. After my undergrad, and I realized I needed to be a bit more attuned to kind of the market in the US and kind of more sharpen my business acumen skills. So that's why I pursued a 1-year master's program at the FIBA School of Business. And that kind of really helped me understand, like the nuances of banking and investments across the industry. So that's how I ended up moving across the world.
Yeah. Can you talk a little bit more about the master's in management studies? Because I feel like that's not as well of a discussed degree as the MBA. It's a 1-year program, but what are the typical like exits from that? Is it mostly international students? I know master's in finance tends to be mostly or about 70% international students looking to like get the visa and sometimes stay here in the US. Can you talk to me a little bit about that, the placements and just typically what happens?
Sure. Yeah. So it is part of the business school where they also have like full-time MBAs, executive MBAs, and other programs. You're right. The master's in management is sort of a newer kind of concept that's been coming up over the last few years. Mm-hmm. It is targeted more towards students who have less than 2 years of work experience. Okay. And I would say, I think for my program, it was split pretty evenly between domestic US, as well as international students.
Yep.
And the people out of my cohort, they went into a variety of industries, whether it's consulting, some people in like banking, private equity, a little bit less so, because I think recruiting for those industries typically happens out of, I think, undergrad in the US. Mm-hmm. But I think a lot of firms are starting to open up to this as another, potential pool of students who are, sharp on like business skills, as kind of another recruiting pathway.
Did you look at like other masters in finance programs before you came over to Duke?
I did, yeah. I did look at a couple of finance specific courses as well.
Uh-huh.
And I just kind of realized I wanted to get a bit more broader overall picture, like do some marketing courses as well on top of just pure finance.
Did you think you were going to go into like fixed income ever? Did you ever think of that as a potential option out of it, or what was?
Fixed income, probably no. I mean, we did have one capital markets course which introduced bonds to me for the first time.
Mm-hmm.
And I did want to work in the investment universe. And I think at the time, investment banking was sort of what I was looking at. But
Mm-hmm.
I think because of the way that program is structured, you kind of miss the recruiting timeline for it. The recruiting for banking is more in the fall. But because it's just 1 year, I haven't really been able to pick up on getting the right recruiting skill set to
So
be
you,
ready before fall.
yes, you wouldn't recommend international students that want to land in investment banking to do this 1 year program because they're kind of miss the recruiting boat.
Yeah, I would say if you're very targeted at firms which have a much structured kind of you recruit only in the fall kind of
Yep.
a program, probably no.
Yeah.
I would say there is a shift in the industry more so on the investment management or even the buy side to look at more spring recruiting, and that's kind of how I ended up with my position.
Mm-hmm. Very cool. Okay, so talk to me a little bit about that. So you're here. You've made the trip. What's it like? I mean, you said you're from the Bay Area originally, so it's probably not like a super culture shock, but you're now East Coast of the US. And tell me a little bit about that and just how you adapted. And I assume since it's only 1 year program, you had to start thinking about what you were going to do right after.
Yeah, I think for me, I did want
Were you,
to
sorry,
get.
real quick, were you born in the US so you didn't have to worry about a visa or anything like that?
I wasn't born in the US, but I did not have to worry about a visa.
Okay, you had citizenship.
Yeah.
Yeah. So, okay, so you're basically have a little bit more less panic because of that, probably, that a lot of the international students have to deal with. So you're coming toward what, the middle of the year, and you're starting to recruit, or did you start recruiting right away?
So I did try to kind of throw myself into the recruiting boat there were a couple of like banking and
Mm-hmm.
PE positions that were opening up for the undergrads that were also available to like the 1 year master students. Just realized I just had this massive gap of knowledge. So I kind of wanted to put myself a bit more prepared for the next time recruiting would come around. I enrolled in more like finance classes, did got more involved in the investment club, started taking up courses on how to like use Bloomberg or
Yeah.
looking at Capital IQ, learn how to like model because Excel modeling is definitely not easy.
Yeah.
So I did all that. It took me a couple of months to get up to speed, and then when spring came around, there were a few junior analyst like rotational programs at my previous firm, and a few actually on the West Coast too.
Mm-hmm.
Across both equities and fixed income. Just fixed income because I didn't fully understand it and I wanted to understand it. So that's how I ended up there.
Very cool. So you're this spring week, kind of, you basically, or not spring week, but it was almost like you said junior analyst. Was that was during school that you kind of had this internship?
So it was a full time job post graduation.
Got it. Okay. So tell me about the interviews for that. You said you didn't really understand fixed income. So were you going in there and just saying, hey, I'm looking to learn, and they like that? How did you kind of get the job?
So I think it's kind of structured similarly to other buy side interview roles. You've got the first round on campus, just talking about your understanding of financial statements. What is EBITDA? Like, are you able to understand what is leverage, capital structures, and then obviously a bit about your personality and background. So you've got a mix of both technical and behavioral.
Mm-hmm.
And then once you pass that round, I had what you call a super day at their headquarters.
Mm-hmm.
And that was, I think it was about 7 rounds with directors from across the team.
Back to back, right?
Back to back, yeah. It was a good 6 hours out there. They gave me lunch.
Could you speak after? You had a lot of water, I hope, while you were talking.
Yeah, thankfully I just checked in the hotel and I went to bed straight away. But, and then
was that in New York, London, or?
So that was so they're headquartered in Charlotte, North Carolina.
Hmm.
So I drove down from Durham to Charlotte for the Super Day and then stayed there for the night. Yeah.
Perfect. Very good.
But yeah, and then each round was sort of about understanding, do you even know what a bond is, kind of. So they didn't ask me too technical, thankfully, but at least if you conceptually understand the concept, I think they're okay with that.
And did you feel like, you said you kind of got up to speed after a couple months of prepping. Did you feel like technically you were like getting pushed pretty hard during this, or was it more just get to know you? And since it's an entry level position, they were a little bit more lenient.
I think they were definitely looking to see your willingness to learn.
Hmm.
And I would say that's kind of pretty important, especially people who are doing sort of non-traditional recruiting backgrounds.
Hmm.
Just the willingness to learn, seeing the fact that you've made an effort to find ways to build your knowledge gap, I think is kind of what they look at.
Hmm.
And I think just even being honest, if you don't understand it, you're like, you don't understand this concept, but you think this is what it could be. So
Yeah,
I think that's definitely something that they appreciate.
very good. So did that happen to you like in one of the super days where you're saying like, I have no idea. Were you forced to say that at one point?
Yeah, so they picked up on one of the activities I had listed on my resume was a stock pitch competition, and they asked me about, walk me through kind of how I did that investment process and how I pitched it to the panels. And then that specific company, they even questioned, they're like, "Oh, do you know if they have any bonds?" Fortunately, I did research that beforehand, and I did know that yes, I'm like, yeah, they do have bonds. I'm not 100% sure where they're trading at, but I think the coupon rate's this percent. So I think that kind of level of honesty and be like, all right, you're prepared for it. So, but fortunately, they stopped at that. They didn't ask me to go more into like the trading levels.
It's interesting. So yeah, if it had been like trading distressed or something like that, they may have started asking you some complicated questions around like, where is the fulcrum security and
Definitely.
all of this? Or
Yeah.
very cool. So yeah, that would be tough with the 2 to 3 months of kind of prep work you had done. It's not that much, right?
Right. And I think, in school, you typically look at trading in and out of equities, but trading in and out of bonds isn't, that widely taught at that level. Maybe, I guess, once you go to more senior MBA kind of classes, you probably get that exposure.
Let's talk about that. So this was an analyst, we'll call it high yield analyst role at a large fund. Tell me a little bit about how you ended up in high yield, what that even, for the listeners, if you can explain what that even means, and then um, if you liked it or not, what was like the actual progression of like getting trained and all that good stuff?
Yeah, and so high yield, the term basically so the yield basically implies that the return you get is much more larger than you would on other sort of traditional debt. Which so you classify bonds as either investment grade or high yield, and the segmentation is typically on the ratings profile. So you've got like S&P, Moody's, and Fitch, which classify these companies. The more colloquial term is junk bonds. I think that's probably been thrown around a lot.
Yeah.
And they're not, I mean,
Well, high yield now is crazy, right? It's like everything's high yield, or like there's so much high yield. The rates are so low, but it's that you're getting almost no return on like taking on a lot of risk, right? No.
it's a very interesting environment at the moment with the interest rates, and because of COVID, we had this massive slew of downgrades into the high yield universe, and
Hmm.
then inflation's creeping back up again. So you've got the whole question of how are rates going to go back up, and but it's an interesting market actually these days. But yeah, kind of going back to
Yeah, sorry, I interrupted.
the
Yeah,
high yield. No,
the
no worries.
analyst, yeah, the high yield analyst days. Tell me a little bit about like how you started, like how clueless you were, how long it took you to ramp up, what skills you needed to kind of be successful in that job.
Yeah, so the junior analyst program that I was hired for is sort of like a 2-year entry level position. I think the idea of it is kind of structured similar to an investment banking analyst program, but it's still sort of it was still in its infancy. Your training for, I think, on the buy side tends to be a bit more on the job, because you are sort of required to know Excel modeling, how to read financial statements, but actually putting the analysis into more coherent recommendations and whether you're right or wrong kind of comes with experience. So but as a junior analyst, you're obviously not going to be handed a portfolio of credits to look after. You do get to work with senior directors, helping them manage deal flow, doing cash flow analysis, listening to investor calls. And I think depending on your comfort level, you'll end up working with senior associates who will let you present to the investment committees. And I think post your 2 years, depending on your caliber, you might get offered a more full-time role. You start kind of babying your own more safer credits, if there was a safe credit universe. And yeah, so that's kind of how my career ended up progressing. I was a 2-year junior analyst, and then I got a full-time offer to stay on.
Very cool. And you ended up in London, correct?
I did. So I could have stayed with the team in the US, or there was the chance to move over with London and look at European high yield. And living in Europe was sort of something I've always wanted to do. So I jumped at it.
Very cool. And when you say Buyside, so this is a fund that has its own LPs and its own investors kind of pulling together, or is this something where it's more of like into high net worth and individuals kind of?
I would say it's a bit more like mutual funds.
Yep.
So it's a variety of investor base, but they're more traditionally like we've got CLOs, which are collateralized loan obligations. Then you've got pension funds. The biggest ones tend to be the Japanese or the Asian clients.
Mm-hmm.
We've also got a lot of pension funds across the US, across Europe. Some of it's insurance money as well.
Mm-hmm.
But I think for what we do, we don't typically look at high net worth individuals,
Yep.
or it's not structured in the way a PE fund would be.
It's all institution, but it's institutional money coming in. Okay. And so tell me a little bit about that transition from the US to London and kind of how your responsibilities change. I assume you started having to cover names.
Yeah, so I think my first few months there definitely felt like I took a step back because it was, a new team. I needed to build my credibility all over again. And
Mm-hmm.
you're in a different market. The rates environment in Europe are different. Kind of the leverage finance industry there is a lot more, I would say, detailed than I think in terms of deal flow in the US is. And you do have nuances of each country, whether it's like UK, France, Spain, or Germany.
What do you mean detailed?
So because it's I think it's like a third of the market of the US in terms of size. So
Mm-hmm.
liquidity and trading is a lot less.
Yeah.
So your diligence process needs to be a bit more thorough. I think
it's like, yeah, it makes sense.
Yeah, that's at least the way my committee over there used to run the process. But so you would have to go through various stages of diligencing and kind of forecasting base cases and sensitivity cases.
Mm-hmm.
And then obviously understanding that from a legal documentation side, a UK deal versus a France deal versus a Germany deal have a lot of nuances. So just kind of like picking up those small things took a while.
Mm-hmm.
But fortunately, I didn't have to learn a new language entirely, so it wasn't that difficult.
That's good. And so, yeah, I mean, you were there in that role for a couple of years. So like, tell me like what a typical day was. Like you'd come in and start, you'd be working on a certain pitch for the investment committee on one name, on like one specific credit, or would it be like a whole group of things that you come pitch them about?
Yeah, so I think my first year there, I used to be in the first half paired up with a senior analyst there. I would attend a bunch of roadshows and investor deals with them, and I start with either building out kind of the models or look at putting together the memo. And at times, if it's an existing portfolio company and there's a quarterly update call coming up, I might just hop on the call, see what their update is, send a note around to my team, kind of be on top of the trading levels. And once I did a couple of rotations of that, I was handed over a portfolio of tech and healthcare businesses to me. And so that was sort of my responsibility. Anything in terms of new issue, new earnings calls, you kind of have to manage your time around it. So I mean, in terms of day to day, it can, and it moves around with new issue markets. So there are busy weeks, there are quiet weeks in summer, but yeah.
And so in terms of like your day to day, it sounds like you'd be on earnings calls, like updating models, trying to see, okay, is this, or is it, should I think of it like, so you're doing a lot of analysis around like whether your company should be in the market for owning these bonds? Or like, hey, you have this portfolio already of one you own and you're trying to figure out should you keep them?
So you'd have as a coverage analyst, you'd be handed either a sector or subsector of. I started with 10, then I built over to 30 by the time I became an associate director. But in terms of daily activities, there's typically not much. You just need to kind of keep an eye out for news flow,
Yep.
especially anything that might impact trading levels the day of or the next day. Quarterly updates, like whenever earnings season comes around, that does tend to be a bit busy. And you do have to, I think on the new issue side, it could be an existing portfolio company, or you might end up looking at a new business that's looking to tap the market to
Mm,
raise sort of new debt financing. And I think that usually gets assigned based on what industry you're covering.
got it.
There are times where analysts are obviously overwhelmed. If you're doing more than 2 or 3 or 4 deals in a week, you end up working with someone else. But yeah, it does move around a lot.
Did you feel like you kind of got the hang of it? And then obviously you were promoted to associate director. So it sounds like they liked what you were doing. Tell me a little bit about that promotion. Did it change anything day to day, or was it more just an acknowledgement of your advancement?
Definitely no. Okay, I hope they like what I was doing, but yeah, it was definitely a little bit of a step up in terms of responsibility. I think in terms of my day to day, not a huge significant difference. I would still look at new issue. I was still monitoring my portfolio companies, still talking to management teams. Obviously, my universe increased, so I just had to be a lot more efficient with that. But I think the bigger kind of step up was coming in terms of looking at new trading opportunities and being a lot more, aggressive with it. Start dipping into more distressed opportunities as well. And I think that's obviously a bit of a slightly different universe, and you're looking at very different nuances as well. I mean, the timing of the promotion also kind of coincided with COVID. So
Hmm.
I think we all naturally got a chance to learn new things at that time.
In terms of like distress, was that kind of why you started looking into that? Because there was potentially some bonds trading well below par that maybe were undervalued, and that was the idea, or were you guys taking short positions on bonds as well?
So as a shop, we're typically long only.
So you're looking for undervalued, any sort of undervalued, anything.
Yeah.
Yeah. Okay.
And I think holding periods vary between 1 to 2, sometimes 3 years.
Hmm.
Sometimes you move in and out if like the recommendation on that certain companies drastically changed. But so, I mean, in terms of with COVID, like my healthcare portfolio was for the most part resilient. So they didn't really trade that sub below market levels. But I was babysitting the travel portfolio as well for one of my analysts, one of my colleagues who was on maternity leave.
Oh wow.
And that portfolio definitely saw a pretty significant dip. And those were the ones we had to be a bit more focused on in terms of liquidity needs and, where do we think they survive the next wave of COVID, and if they will, should we be buying this at distressed levels?
Right.
I mean, COVID's still going on, so we don't know how long that's going to last. But yeah,
What were you pretty aggressive, or was the company pretty aggressive in your recommendations? Maybe once the vaccine news came out, you were more aggressive, but
yeah, no, I think, and I think that's where active, asset management kind of comes into role. You do have to look at sort of these opportunities, and when the markets get displaced,
yeah,
you need to kind of go out there and buy them. We ended up buying them way before even we had any idea when things might reopen.
yeah,
And our thesis tended to be, well, maybe they reopen in the summer, or if they don't reopen in the summer, they stay shut for the rest of the year, but they still have enough cash
they
needs to
can
kind of
make it.
go around.
Yeah,
Yeah.
they can make it. Yeah, that's interesting. Crazy times to be babysitting that portfolio.
Yeah, but it was a good learning experience for sure.
For sure. So tell me when you thought business school was the good next step, and tell me about that thought process and all that.
Definitely. So I definitely enjoy kind of being on the buy side and staying in this universe of finance. But I think kind of like with COVID, especially, just wanted to made me think that I wanted to move away from kind of public market investing, potentially switch more on the private side, learn about businesses more on the operational level, and that's kind of where the whole business school idea kind of came into fruition. Still, figuring out whether it's, I don't know if I want to move more into the startup universe, whether start looking at venture capital, or maybe it's private equity, but kind of open to ideas. We just started a month ago, so
Or
still got some
private
time.
credit. Or private
Or
credit.
private credit as well. Yep.
Yeah, that and they may really like your background for that. So, or distressed hedge fund or something like that. Very interesting. So you kind of were thinking, hey, this might be interesting. It'll give me a couple of years to kind of reset. So you're now at Kellogg, right?
Correct. I am at Kellogg, and we just started about a few weeks ago.
Oh, that's early. It's start in the middle of the summer.
So
And
I'm actually in their 1Y program.
oh, okay. Tell me about, yeah, let's talk about that. And then it's a 1 year program. Yeah, yeah.
Because I've done my 1Y master's in management beforehand, I just figured doing the full 2 years probably would not have been the best fit for me in terms of opportunity cost. So
Yep.
the 1Y at Kellogg just seemed a bit more better fit, and they've got some great courses to take, especially within like VCPE, and they've got startup and venture labs, and those were what I really wanted to try and pursue.
That's
So yeah,
awesome.
I mean, it is going to be an intense 1 year, but
Well, you also get, but the great part about that is like for almost like, I assume it's the same price as a normal MBA, but just for 1 year. So it's half as you still
slightly a
get
bit
the
more because you end up
similar credits, number of credits in 1 year.
you take, I think, a couple more credits than I think you would in the first year of a 2 year program.
Hmm.
So I think the tuition's is adjusted for that.
But they still give you the MBA.
Correct. You still get an MBA.
Look at the MBA, you still get the network.
Correct.
Yeah. That's great. I didn't even know they had that. So are there schools doing that? Is it like a one? It's not like the executive MBA. It's literally called 1Y or Y.
It's just 1Y. There are a couple more accelerated MBA programs coming up as well. I think my former alma mater, Fuqua has one too. I think it's definitely a lot more common in Europe. In
Hmm.
Europe, European MBAs tend to be either like 15 months or
Yep.
similarly much shorter. So you do end up missing the chance to do a full 2 month internship in the summer.
Hmm.
But if you know what you want to do and you're not making a massive career pivot, then the 1Y makes sense.
Do you feel like this is going to give you enough time to figure it out as we approach the fall?
I hope so. I've been
Well,
through it once again, so I think I know what I need to do now.
well, let me know if I can help with trying to narrow it down because it's tough. It looks like you're looking at a lot, like VC, startups, private equity. It's all very different.
Yeah.
And PE is super competitive coming out of MBA just because everyone who kind of was prior can come after. But I think your background's really interesting because you were already on the buy side, but I'm on the um, credit stuff. So you could say, hey, I'm really good at the downside case. I'm really good at constructing that.
Like I know when things go wrong, but
Yeah.
trying to get the upside is where we need to work on.
Yeah, exactly. Exactly. That's cool. Awesome. Well, it's been really helpful to see. So you're kind of just we'll wait and see where you come out. Maybe we'll do another in a few years. We'll kind of catch up with you,
Sure thing.
see where you're at. Any other kind of final words of wisdom before we call the pod?
Yeah, I mean, I guess I would just say, even kind of going through the whole, when I was going through the whole business school application route,
Hmm?
and it just made me reflect that I do have a bit more of a non-traditional background. And I would say that it's not impossible to kind of get into the career or the industry that you want to do. It is a bit, yes, unstructured, but you do have to leverage your network, talk to as many people as you did, find a mentor if you don't have a mentor, become one yourself. And I found that was very helpful through a lot of the changes I've had throughout my career.
One last thing after we hit stop, I realized that we didn't talk about diversity and inclusion, and you've been very much involved in that, it sounds like, since you first started your career. So tell me a little bit about what you did there and, what you would kind of advise.
Yeah. I mean, I think working in this industry, there has been quite a lot of changes over the last few years. And when I kind of go back to when I started off as an analyst, I was the only female from a relatively minority ethnic background at the time. So it came from a place of like I was looking for a mentor, and that's when we kind of established a women's network within our headquarter team. And when I moved to London, I sort of spearheaded that with me, and I took it like, this is a great support system, and it will help people kind of navigate the ins and outs of their career. And then wanted to take that and broaden it outside of just my firm.
Mm-hmm.
So we got involved with some of trade organizations, which had a lot of diversity and diversity and inclusivity recruiting efforts.
Mm-hmm.
And a lot of that was more about spreading awareness of finance as a career, starting from, I think, early on, like reaching out to high school students. And there's a lot of high school students in the UK, which work with charities for students from minority ethnic backgrounds, including African and Caribbean regions. And just kind of spreading that word and getting interest early on, I thought was a very important thing to do. And then from there, kind of tag along with D&I questionnaires or sort of some anti-bias training workshops. And it's an ongoing effort, and I don't think there's an easy answer to it, but the fact that people are opening up to it and are looking for ways to get to a solution, I think is the first step. But yeah, hopefully we'll see how this continues to carry on.
Yeah, we've worked with MLT and SEO. I don't know if you know those programs
Yeah,
here in the US.
I am heard of them. Yeah.
Yeah, so we worked with them closely in helping put some of their members through kind of mock interviews and prepping them through our mentor network as well. So hopefully helpful to them. But again, S, thanks so much for your time. I'm going to we'll loop that in the episode. So thanks so much.
Perfect.
Talk soon. And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.